Bitcoin is a digital currency which operates free of any central control or the oversight of banks or governments. Instead, it relies on peer-to-peer software and cryptography. A public ledger records all Bitcoin transactions, and copies are held on servers around the world. Anyone with a spare computer can set up one of these servers, known as a node. Consensus on who owns which coins is reached cryptographically across these nodes, rather than relying on a central source of trust like a bank. In today's video, we will be explaining what is Bitcoin and how does it work. Without further ado, let's begin. What is Bitcoin? Bitcoin is a decentralized digital currency that you can buy, sell, and exchange directly, without an intermediary like a bank. Bitcoin's creator, Satoshi Nakamoto, originally described the need for an electronic payment system based on cryptographic proof instead of trust. Every Bitcoin transaction that's ever been made exists on a public ledger accessible to everyone, making transactions hard to reverse and difficult to fake. That's by design, core to their decentralized nature. Bitcoins aren't backed by the government or any issuing institution, and there's nothing to guarantee their value besides the proof baked in the heart of the system. The reason why it's worth money is simply that we, as people, decided it has value, same as gold. How does Bitcoin work? Bitcoin is built on a distributed digital record called a blockchain. As the name implies, blockchain is a linked body of data, made up of units called blocks containing information about each transaction, including date and time, total value, buyer and seller, and a unique identifying code for each exchange. Entries are strung together in chronological order, creating a digital chain of blocks. Once a block is added to the blockchain, it becomes accessible to anyone who wishes to view it. Acting as a public ledger of cryptocurrency transactions, blockchain is decentralized, which means it's not controlled by any one organization. It's like a Google Doc that anyone can work on. Nobody owns it, but anyone who has a link can contribute to it. And as different people update it, your copy also gets updated. While the idea that anyone can edit the blockchain might sound risky, it's actually what makes Bitcoin trustworthy and secure. How does Bitcoin mining work? Bitcoin mining is the process of adding new transactions to the Bitcoin blockchain. It's a tough job. People who choose to mine Bitcoin use proof of work, deploying computers in a race to solve mathematical puzzles that verify transactions. To entice miners to keep racing to solve the puzzles and support the overall system, the Bitcoin code rewards miners with 6.25 Bitcoin for each new block. That amount of Bitcoin equates to nearly $190,000. This is how new coins are created, and recent transactions are added to the blockchain. It was possible for the average person to mine Bitcoin in the early days, but that's no longer the case. The Bitcoin code is written to make solving its puzzles more and more challenging over time, requiring more and more computing resources. How to use Bitcoin? In the US, people generally use Bitcoin as an alternative investment, helping diversify a portfolio apart from stocks and bonds. You can also use Bitcoin to make purchases, but there are some vendors that accept the original crypto. Big companies that accept Bitcoin include Microsoft, PayPal, and Whole Foods, to name a few. You may also find that some small local retailers or certain websites take Bitcoin, but you'll have to do some digging. You can also use a service that allows you to connect a debit card to your crypto account, meaning you can use Bitcoin the same way you'd use a credit card. This also generally involves a financial provider instantly converting your Bitcoin into dollars. In other countries, particularly those with less stable currencies, people sometimes use cryptocurrency instead of their own currency. How to buy Bitcoin? Most people buy Bitcoin via cryptocurrency exchanges. Exchanges allow you to buy, sell, and hold cryptocurrency. Setting up an account is similar to opening a brokerage account. You'll need to verify your identity and provide some funding source, such as a bank account or debit card. Major exchanges include Coinbase, Kraken, and Gemini. You can also buy Bitcoin at an online broker like Robinhood. Regardless of where you buy your Bitcoin, you'll need a Bitcoin wallet in which to store it. This might be called a hot wallet or a cold wallet. A hot wallet, also called an online wallet, is held by an exchange or a provider in the cloud. Providers of online wallets include Exodus, Electrum, and Mycelium. A cold wallet or mobile wallet is an offline device used to store Bitcoin and is not connected to the internet. Some mobile wallet options include Trezor and Ledger. A few important notes about buying Bitcoin. While Bitcoin is expensive, you can purchase fractional Bitcoin from some vendors. How to invest in Bitcoin? Like a stock, you can buy and hold Bitcoin as an investment. You can even now do so in special retirement accounts called Bitcoin IRAs. No matter where you choose to hold your Bitcoin, people's philosophies on how to invest it vary. Some buy and hold long-term. Some buy and aim to sell after a price rally, and others bet on its price decreasing. I think in some places, people might be using Bitcoin to pay for things. But the truth is that it's an asset that looks like it's going to be increasing in value relatively quickly for some time. So why would you sell something that's going to be worth so much more next year than it is today? The majority of people that hold it are long-term investors. Consumers can also invest in a Bitcoin mutual fund by buying shares of the Grayscale Bitcoin Trust. However, the minimum investment requirement is $50,000. This means the majority of Americans aren't able to buy into it. Should you buy Bitcoin? Many financial experts support their clients' desire to buy cryptocurrency, but they don't recommend it unless clients express interest. The biggest concern for us is if someone wants to invest in crypto, and the investment they choose doesn't do well, and then all of a sudden they can't send their kids to college. The speculative nature of cryptocurrency leads some planners to recommend it for clients' side investments. Some call it a Vegas account. Let's keep this away from our real long-term perspective. Make sure it doesn't become too large a portion of your portfolio. Bitcoin is like a single stock, and advisors wouldn't recommend putting a sizable part of your portfolio into any one company. At most, planners suggest putting no more than 1% to 10% into Bitcoin if you're passionate about it. If it was one stock, you would never allocate any significant portion of your portfolio to it. So guys, let me know your thoughts down in the comments section below. For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.